to give an inspiration through fried rice as an example, how to establish selling price with a simple Excel calculation. This video will also give you an initial insight into the application of fundamental cost accounting principles within an industrial company. When calculating the selling price, the first step is to determine the acquisition cost of the product, which varies depending on the acquisition method. For products acquired through purchase, determining the acquisition cost is straightforward by adding the invoice price to any associated delivery charges. Conversely, for products produced internally, like fried rice, specific data and calculations are necessary, such as the recipe for a portion of fried rice and a list of ingredient prices. Once the price list is complete, convert the unit price of each ingredient for calculation of recipe production cost. Next, identify semi-finished material, which in this example, only white rice. Why should it be identified? Because we need to add the rising cost associated with the raw rice processed into cooked rice, including cost related to water and electricity usage, into the unit price. Assuming additional cost of 5 per gram for water and electricity, the unit price of white rice is calculated to be 21. Move to Recipe in column Unit Price. Populate it with the total unit price of each ingredient, derived from the price list. This can be done manually or by using the SUMIF formula. Upon completion, start computing the production cost for a portion of the recipe. The formula is unit usage times unit price. The result is 15,000. Next step is to start the process of determining the selling price by using the following formula: production cost plus indirect product cost plus profit from product equals selling price. Based on the previous calculation, the production cost amounts to 15,000. Indirect product cost refers to expenses incurred outside the recipe, but allocable to each portion of fried rice, such as topping and packaging expenses. For the purpose of this example, let us assume the indirect product cost total 3,000. In the real practice, production cost plus indirect product cost are commonly referred to as cost of goods sold or COGS. So the COGS of a portion of fried rice is 15,000 plus 3,000 equals to 18,000. And then, profit from product is the expected profit from each unit or portion of the product. It is commonly referred to as product margin. When the product margin multiplied by total quantity of sales, it will be used to cover all costs that remain fixed regardless of sales volume, such as employee salaries, office utilities, rental expenses, and so on. Its resulting balance will become the business profits, which the amount is depending on the sales volume. Determination of the product margin per unit or portion typically depends on individual assessments and business-related factors. In this example, let us assume that the product margin is 25%. If the 25% is applied to COGS, the selling price is calculated by adding 25% of COGS to COGS itself. The formula will be 18,000 plus 25% of 18,000. This results in a selling price of fried rice of 22,500 per portion. This first method is beneficial for businesses focusing on production efficiency or those facing fluctuating raw material prices. If the 25% is applied to selling price, the calculation follows this formula. The selling price represents 100% of the initial value. After deducting 25% for the product margin, the remaining percentage is 75%, which represents the COGS. Given that the COGS amounts to 18,000, the selling price can be calculated by dividing the COGS by 75%, resulting in a selling price of fried rice of 24,000 per portion. This second method is beneficial for businesses focusing on fixed cost efficiency or those facing fluctuating selling prices. Which method to be applied will depend on your business type and strategy. Excellent! We have successfully completed the tutorial. If you found it helpful in improving your Excel skill, kindly subscribe, like, and comment. We encourage you as well to watch our other videos. Thank you and have a productive day.